Okay, we are live. Hi everyone, welcome to the Timing Research web show for September 9th, 2014. My name is David Kosmider. I am the creator of Timing Research. If you are not too familiar yet with Timing Research, we are basically building a crowdsourced sentiment indicator. Each week I send out a 5-question survey to all of the Timing Research subscribers to gauge their thoughts on the current state of the market, especially the S&P 500, and then I publish all that data in a free report every Sunday afternoon. So today we'll be talking about the 50th weekly report from last night. And if you haven't had a chance to see the report yet, the current report and all the previous reports are available at TimingResearch.com / reports. Okay. And I have three great guests with me today: Brian Neall of TradeToBeFree.com, Bennett McDowell of TradersCoach.com, and Wayne Reddy of SteadyTrader.com. So let's start with Brian. If you could give just a quick little information about yourself for the viewers.
Yeah, hi. I've been a trader for about 12 years now, and I used to invest in mutual funds and put my money with mutual fund managers. And about 12 years ago or so, I've noticed that they weren't doing as good of a job as I'd hoped, as I wanted to. So I started to do some research to find out, the best practices or the best trading strategies out there. And I learned a few techniques that worked really well in the past few decades, and I kind of started to use those techniques, and then at the same time learned technical analysis, the ins and outs of that, and came up with my own hybrid system that I used in my own trading for a while. It worked really well, and so I brought it to the general public back in 2004, and I've been writing a newsletter. Well, at that time I wrote a book on my methodology, and sold on my site, and I soon launched a newsletter. I've been writing that newsletter for about 10 years now, on TradeToBeFree.com, and about 2 or 3 years ago I started a second site called InvestToBeFree.com. But my real focus as a trader, what's different about me than most traders, is that I try to incorporate fundamental analysis techniques into my trading. I try to find certain stocks that have the right fundamentals before I use technical analysis to try to find good entry, try to find good trading setups. So I'm only looking at certain types of stocks in the market, which is usually a small portion of the total stock universe. But yes, that's my background in a nutshell.
Okay, thank you. And Bennett, if you would tell us a little bit about yourself.
Sure. Thank you, David. And Dave, thanks for having us here today. I think this is a great format. Been in the markets for a little over 20 years. Started TradersCoach.com really about 1997 to 8. What I was doing is I was with Prudential Securities as a financial advisor, and was managing quite a bit of money. We had some very high net worth folks that eventually what we did is we created our own hedge fund within the firm, where we snaked off about 10% of their assets into a very active momentum trading account. And I really opened up TradersCoach.com at that point as a portal where all my clients could come and meet with me, where we could talk about strategies for the week and so forth. We did it back then via text, because technology was not quite what it is today back then. If you had text chat, you were pretty cool back then. So we did that, and the system basically did great, and everybody was happy, but wanted to know exactly how we were doing all this trading. So as technology increased, the website became more and more popular, more and more of a hub, and eventually what we did is we took all the analysis that we were doing on paper, the technical analysis, and put it into a software format, and then began to offer that as well to our clients. Before we knew it, one thing led to another. We were doing education, and of course blossomed into where we are today, where we offer a full line of software products, including risk control. We have a stock picking service that's doing really well. We have educational programs out there. So it's really blossomed into something that I never imagined it would when we first started. So that's kind of our story. Right now, what we do is we focus on technical analysis primarily. I'm big into the Elliott wave. I got another book coming out later next year on the Elliott wave. So I'm very big into that. I'm very big into FIB and also the realities of price patterns in the market. So some of my interpretation today will be built off things of that nature.
Okay, great, thank you. And Wayne, if you would also just give us a quick bio about yourself.
Sure, David. Been trading for about 15 years. Worked for a number of really trading service and education providers for the past 8 of those years, and then started my own website, Steady Trader, in January of this year, in an attempt to create something that I felt was, I guess, unique in a way. We attempt to combine the best practices of what I call big data. Everyone's talking about big data now with higher math, and by that I mean really algorithmic, calculus-based, probability-based mathematics as opposed to technicals. So we combine big data with higher math to identify short-term trends for individual stocks. I would say we're structuralists at heart, and I think one of our slants that is a little bit different is that I really believe that the very structure of today's market is fundamentally different than what they were 5 years or 10 years or even 5 months ago. And because things like technology, the technology infrastructure, the private markets, dark pools, global politics, these are all changing so quickly and accelerating as time goes on that, looking back at, a lot of this research that's 5, 10 years old or whatever, it doesn't really excite me as much as looking at what's really going on in the last week or month. So we really keep a dedicated short-term focus. And we take our lead from the hard sciences, physics, chemistry, biology, math. And a lot of those sciences really believe that, you can define the who, what, where of what's going on, but you're never going to know the why. And if you get bogged down in the why, well, then you don't really, you can identify the patterns of what's happening and make an action plan. We publish a newsletter and stock pick lists. We're currently doing about 85% accuracy, so so far so good. And that's it. Again, I want to give you kudos, David, to what you're doing. I think, as we spoke earlier, I think what you're doing in terms of a crowdsource indicator is aligned with the kind of approach I'm taking, which is basically looking for granular data input at the real-time level to really start to get a better sense of what's going on in the markets, because it's all about immediacy, in my point of view. So I really hope the timing research indicator really takes off.
Yeah. Okay. Well, yeah. Thanks. Thank you to you three for being here, and yeah, let's get started with the report. I'm gonna share my screen here so we can display the report itself. And I also want to say too that I have turned on the Q&A app for this Hangout. So those of you who are watching, if you have any questions throughout the presentation, just type in your questions and we'll get to them at the end of the show. So for the survey each week, I ask 5 questions, and questions number 2 and 3 are the most important. They're the easily quantifiable questions. They ask, question 2 asks basically to guess or forecast what you think the S&P 500 will do in the coming week, either higher or lower. This week was slightly bullish, 3% selected higher for the week. So that's today's open to Friday's close. And let's start with Brian. What do you agree with that, or what's your forecast for this week?
Oh, I'm not. Uh, I don't try to forecast the market for a few days ahead of time. I usually try to forecast the market for a few weeks to a few months. If I see a market in an uptrend where we've had some bullish signals in the past and it's trending higher and it continues to trend higher, what I do is I look for a bearish signal, and if I see that bearish signal, I'll then start to move to the sidelines, and I'll get very cautious. And at this point, I haven't seen that bearish signal yet. So we did see some, you know, um, more volume come into the market last week, and the averages didn't really go anywhere. We had a bearish candlestick pattern on the Nasdaq, which is kind of interesting. We had a hanging man, and then a bearish engulfing candle. That often marks a top in a market, not necessarily a big top. Going into a big bear market or a big decline in the market, but it's very often at least an intermediate top or short-term top. So if I had to guess, the rally is we are getting to the upper bound of the trading channel we've been in for a while, and if I had to guess, I'd say lower, but you can hug that channel for a while before it comes back to the lower part of the channel. So it's really hard to say. I'd say about even to a little lower from this point.
Okay.
If I had to guess.
Great. And Bennett, what would your forecast be for the week?
Well, I think Brian makes some good points, because when I look for a short-term type of forecast, I usually watch an intraday chart like the S&P E-mini on a 60-minute time frame. And it looks pretty channeled right now. Now, we've had a nice move up last week, and then it kind of has gone sideways and it has remained so. It's really a crapshoot at this point to see which way it's going to break out, because it could break out for one more high, which could end the top of what we would call an Elliott Wave 3 on this time frame. However, Elliott Wave 3 could also be over, and it could be in the midst of tracing down into a Wave 4 correction, but we're not going to know until it breaks out of this channel that Brian had mentioned. The channel, the upper limit of the channel that we're watching is 2007.25, and the lower part of the channel is 1988.25, and this was put in on the 60-minute time frame on the 5th of September. So those are the two upper and lower support and resistance, or resistance and support bands we're watching. Overall, with the Dow Jones breaking its July 17th high over the last few weeks, and again doing it again last week, it hasn't closed above that, but it did break it. We feel that the actual longer-term trend is still up. We do know that the trend won't last forever, and we are expecting a big decline in the Dow. We thought we might have been starting it earlier, but the fact that the July 17th high did not hold indicates to us that we're probably going to have a few more months to the upside before we see a possible decline sometime maybe in 2015. So to get back to your question, what's going to happen by the end of the week? It's a mixed bag. I guess I'll go with the fact that we may be on the upper edge of the channel before the end of the week, so I'll say pretty much where it is now to slightly higher. That's where I'll put my bet for this week.
Oh, okay. Okay. Thank you for that. And Wayne, what would you say for the week? Higher or lower?
Yeah, I'd agree with both Brian and Bennett. Probably a little bit more with Bennett. I haven't seen the bear sign yet. I know there's a lot of talk about correction. There's always a lot of talk about correction, but still don't see the bear. Preparing for this particular talk, I checked back to what our algorithms looked like compared to July, and actually they're not as weak as they were in July, which was a rougher month. So I think we're going to hold steady this week. I think it's going to be, I know you're making it an up or down choice. I would be more inclined to say neutral, but it's good, neutral to up a tiny bit. But I do think
okay.
it is not, like I say, I would base my prediction to the upside on the fact that it's just not as weak as we were seeing it in July. So I think we're still okay for another week.
Okay. So Brian, you said down slightly, right? And
Yeah, about from where we are right now, about even to slightly down. Yeah.
Ben and Wayne, you said you both said up or higher.
Correct. A little higher.
Okay. And okay, so question 3 of the survey asks basically a hypothetical bet. If you had $100 and had to bet any amount of that on your forecast being correct to gauge confidence, what would you bet? So let's start with Brian again. What would you bet on your guess or forecast?
I would bet nothing either way. I think it's
Not allowed.
there's no real I think for me right now bias either way. I mean we're still trending higher. We're not trending higher on particularly strong volume, which is worrisome. Like I said, we're getting to the upper part of that long-term uptrend channel, and you're going to have fluctuations back and forth, and it can come back a few percent, it can go higher a few percent. I think eventually, a lot of times when you see like these protracted uptrends, if you go back the past few years and look at the S&P 500 chart, for instance, you see that very sort of narrowing uptrend channel, and it's been so consistent for so long. A lot of times when a market or a stock does that for a long period of time, it will make a run out of that and jump a lot higher and go into more of a parabolic move. And you'll see that sometimes, because I think part of that is because there's so much reinforcement of that trend. Any pullback, you got to buy that pullback, whatever that is, and the market then goes higher. And if that's happened in the past so many times, people anticipate that. And right now, there's a lot of investors and traders, I think, are just looking for any kind of small pullback, and they're ready to pull the trigger. And and the market's gone up so much over the past few years that it's a psychological reinforcement of this rally, and I think it tends to end with a strong run to the upside, followed by a larger correction. It might not be a huge correction, but some kind of correction after that. So I think we might be setting up for that, where the market takes off, but I don't think we're quite there yet. When that's going to happen. So maybe like late October, November, maybe, or January.
Yeah, that's great. You said 0, because that's kind of the point of the third question. Like I said, to gauge confidence. So a lot of people have asked for a neutral, answer to question 2. But the way I have it set up is, you're forced to either pick higher or lower. But then, when you rate your confidence, if you really don't know, then you can rate a really low confidence. So,
yeah.
So that was great. Thank you.
Yeah.
So, and Ben, what would your confidence level be for your?
Well, I like Brian's answer, because until we break out of this channel, the confidence level is almost 0, because it could go either way. We've had a run up since August 12th on a 60-minute time frame that I'm looking at. We're topping right now. Sure, could we make one more high? That's possible, but that would probably be the last one. But we equally well could break down here, and if that happens, and the correction from a fib retracement area would be around 1956 to 1977. We're sitting about 1998 or 6 right now. So it's going to depend on which way it breaks out of the channel. So I probably really have to have a confidence level of around, it could go either way, either 0 or 50%, depending on which one puts me right in the middle.
Okay. Okay. And Wayne, what would you say for your confidence level?
Well, I am a numbers guy, and I'll just stick by what my accuracy rate has been 85% all summer, so I'll say 85% because my algorithm is still a tiny bit up. So
Okay.
I will stick by my stuff.
Okay. Sounds good.
Even though emotionally, I believe I'm with both you other guys on this. These are tremulous times.
Okay. Great. All right. So that's the page one of the report. At the bottom of page one, you have the entire history, and actually for this week for confidence, it was the sentiment itself for question 2 was very close to even, and then the sentiment or the confidence for both sides was also almost even, with a slightly higher confidence on the bullish side. So it's a very neutral week again this time. Page 2 of the report shows the entire history, and also if you go to TimingResearch.com/raw data, you can download all the raw data and spreadsheets and history of the entire project so far. So let's move on to page 3 of the report, which is the start of the open response questions. And so the question 1 just asks people to just write down any major news events or technical events or anything they're expecting to happen in the coming week that might affect the markets. So I just want to see if you guys have anything else you haven't mentioned yet. Brian, is there anything else?
Geopolitical events I think are always sort of waiting in the wings. Ukraine and ISIS, of course. I mean, those events could affect the market. Although, up to this point, those events really haven't had much impact. There's been some pretty good tremors in those parts of the world, and things have been going on, growing dangers, and so far it hasn't really affected the market much, it seems. So, yeah, I'm not sure. Beyond that, I think it's going to be noise, static. See what happens that day. Trying to forecast events that we don't know yet. I mean, there's going to be some news stories this week. It's probably going to be geopolitical related, and it could affect the market a little bit either way. That's the way I look at it. But no, I don't see anything major in the coming week.
Okay. And Ben, do you have anything else you're watching for this week?
Yeah, just a little bit. We have September 11th coming up, and that's always a little jittery around that time period due to the terrorism that we experienced on that day. So that's an anniversary type of thing. I think folks always wonder if there's going to be any type of an attack associated with that anniversary date. So I think that makes people a little bit nervous and may make them hold back. If we have no issues on that, which I don't think we will, but you never know. If we have no issues there, then I think the market may begin, if there's nothing else coming out of the Middle East or anything overseas, then we may have more room to start moving upward. So the market may this week hold back a little bit until after that September 11th time frame. I also think there's some retail sales announcements coming out. I think it's on Friday. And from what I see, I look at a lot of different stock sectors, and the retail sector is starting to do pretty well. So that's kind of an interesting indication, I think, that the stock market as a whole may do pretty well a little bit later on as well. So I think we're going to have some bullish times ahead of us. I do, again, think there's a big change in trend coming, but I don't think we're going to see that probably until 2015. But for between now and the shorter term, I would expect to see a bullish market overall. But I do think this week, watch September 11th.
All right. And Wayne, do you have anything else you're watching for this week?
Yeah, I agree with Bennett. We've been actually tracking the news a little bit, even though we don't trade by it, but we've been working on figuring out if we can build mathematical models on that. And the one story that does seem to have affected the markets in the last few months is the Ukraine story. The other ones, you think they would, but we haven't seen a statistical correlation, except for the Ukraine story. And it looks like they're going to work that out. So I'm feeling it's one of the reasons I went to the bullish and 85%. But I totally agree with Bennett that it'll probably happen Thursday and Friday after the world does not end on September 11th. There's going to be some worries, justifiably so. But I think that by midweek we're going to see some real progress in Ukraine, and that will definitely lift the markets.
Okay. Okay, great. So let's move on to question 4. Question 4 on the survey is different each week. I ask questions about news events, trading concepts, ideas for just anything that might be interesting to traders. So if you have an idea for a question you would like me to answer or ask in a future survey, you can go to TimingResearch.com/question and submit your own. But so this week is about the Scottish independence referendum. On September 18th, voters in Scotland will decide whether they want to break away from the United Kingdom and become an independent country. Do you think the referendum will pass? And if it does, do you think the change will be good for the European economy? So I actually went through and quantified the results of what people submitted. And as far as do you think the referendum will pass, 42.2% said yes, 57.8% think that it will not pass. And then if it does, do you think the change will be good for the European economy? 19% said they do think it will be good. 52.4% said they know that they don't think it'll be good. And 28.6% said they think it'll have no reasonable impact on the economy. So let's start with Brian again. What are your thoughts on the referendum?
Well, I was doing some research on this recently, and seems to be the consensus right now is it won't pass. They don't think it will pass. That's changed a little bit over the weekend, I think. There's more of a chance now that it will pass. I guess if it does pass, one of the biggest impacts is the uncertainty of how it will be implemented. So if they do say, yeah, we want to be independent, and they pass it, how does that happen? How long will that take? And what are the steps to get there? And that's a lot of uncertainty right now for even experts looking at the situation, and that will cause probably a problem in their markets, in the UK market, and Scotland market, Scottish stocks, because the uncertainty will hold back investment decisions. And so there will be some impact, I think. If it does pass, there will be some impact, at least short-term, negative, in the UK and Scotland. I guess they're saying that some of the parliament leaders may have to step down over it if it does happen. So, there could be some tremors over there. I don't think it'll affect the overall European economy that much, and our market here that much.
Oh, okay.
But I think it hasn't had an impact on the sterling. It's a minor impact, 1 or 2%, and will have an impact on their economies in the UK and Scotland. And it would probably be negative at first, and then it would get better over time. It's probably once they figure out exactly how they're going to implement it, if it does pass.
Mm-hmm. Okay. And just a reminder, too, for everyone watching, if you have any questions, just type them into the questions area, and we will answer those at the end. Ben, what are your thoughts about the Scottish referendum?
Well, first of all, I'm glad you sent me the question early because I really didn't know much about it at all. And I had to do a little research like Brian did on it. And it's funny because, it's not mentioned in mainstream news here in the U.S. that much. But it is a big deal over there. And I'm not really sure. I don't know that much about it that I think I can really predict which way the vote's going to go. I think if it goes positive and they do gain independence, I don't think that will affect us here. It may affect a little bit over there. But like Brian said, I think it's the uncertainty of the implementation of that kind of referendum that will be important. And if it goes well, you could see a domino effect later on. So I would think, other countries doing the same thing over there. I think probably short term, it's going to have very little impact on us here, maybe a little bit over there if it gets passed. If it doesn't gets passed, I think it'll be almost like business as usual, so to speak, over there. If it gets passed and it goes well, then I think longer term you're going to see a domino effect on that. So I don't know if I'm really answering your question on that because I'm not really sure if it's going to pass. I just don't know that much about it. So I'd have to say at this point here, from what I researched, it looks like it may or it may not. Like Brian said, it didn't at first. If you went back 6 months ago, they didn't think it was going to pass. You research it more later, and now it's getting closer to passing. And if it does pass, I don't think right away it will affect the European economy that much. I think it'll depend on how they implement it.
Okay. And Wayne, what are your thoughts about the vote?
Well, when you shot me the question, David, I went right out and loaded up my freezer with haggis because I know prices are going to go through the roof. So, but really, I'm old enough to remember when the IRA was setting off car bombs in London, and I don't think this is actually going to happen. The UK, well, I should say the Crown, pulled out one of its trump cards over the weekend. It's not an accident that Will and Kate announced the new grandchild this week to the beginning of their PR effort. If things look rough, you're going to have a lot more warm, fuzzy talk coming out of Cameron just before the election. So I really don't think that this is going to pass. It sort of reminds me of in Canada, what is it? Not Ontario, Quebec. Votes to secede every 5 years, right? So they're doing it there, and I just don't see it happening on the first shot. And again, I think that England, especially or the UK powers that be, will start to speak conciliatory language at the last minute to really ward off the threat if they think the vote will go that way. If it did happen, I see the effects being more geopolitical than market in terms of market as traders that we need to really worry about happening. Geopolitically, the UK loses a lot of clout, no question about it, and it also will probably weaken the effectiveness of the EU, in things like the Ukraine and whatever. But that's geopolitics and not necessarily, stuff that will directly affect us as traders.
Mm-hmm. Yeah, you mentioned the IRA, and Ben and I before the show were talking about how it could have implications too for Northern Ireland and Wales and even other parts of the European continent that have had groups and areas that have wanted to secede in, and Canada too, like you mentioned.
Yeah.
So I think it'll be. I don't think it'll have a lot of impact on the economy or markets either, but it'll be interesting for historically and politically. See what
Right.
happens. So we only have, let's see, we have one question so far about the predictions from the panelists last week, if they were correct and how that worked out. I actually don't have that in front of me right now, but that will be added to the report in the coming weeks about what my guests have forecasted each week, and compare that alongside the overall sentiment. So I think that's. Do you guys have any other comments you'd like to make? About anything we've talked about?
Well, I think one thing I was thinking of was this notion that September is always a bad month for the market, and you got to watch out for September. And historically over the past 50, 100 years, September has been the worst month. But over the past few years, it hasn't been bad at all. It's been good overall. There's been like one bad September, since the market bottom in 2009. So I was just thinking of that, and for traders to know that, and to realize that just because we're going into September and October doesn't mean that we're in for a big correction. And of course, we're going to have a correction at some point, but you still want to use your analysis techniques and keep the course and not worry too much about the seasonality of September, because the past, like I said, 5, 6 years, it hasn't really been coming into play.
Yeah, okay. Yeah. All right. Well, I think that's it for this week. Again, want to thank my guests, Brian Neall of TradeToBeFree.com, Bennett McDowell of TradersCoach.com, and Wayne Reddy of SteadyTrader.com. So thanks, guys, for being on the show this week, and for everyone viewing, thanks for being on. So, and remember to each week go out and fill out the new survey. It's at TimingResearch.com/current survey. So that's it for this week. Thank you. Bye.
Thank you, David.
Okay.
Thanks,
David.
David.
Brian Bennett.